I just had to let you know you're.
Om Swastiastu. Hello everyone, my name is Putu and Wahyudi. You can call me Rian. I am from class 8 counting managerial. My number is 28. Today I'm gonna presenting and answering the question of middle test on counting information system. Okay, we move to the first question. The first question is explain the difference between data and information and include example. Okay, in short, data is like raw materials. According to our slide, data refers to all the facts that collected, stored, and processed by an information system. It's usually just random number, dates, or addresses. On its own, it doesn't really tell us much, but on the other hand, information is data that has been processed, so it actually makes sense and has meaning. To make it super easy to picture, let's look at the sales info example. Imagine you just see random number and floating like this. Just for January 2026, PT Sejahtera Raya, the number 3 and 900,000. It's pretty confusing, right? You don't know what it means. That is we call data. But once those pieces of data are placed within the context of sales invoice, everything makes sense. Invoice date is for January 2026, customer name is PT Sejahtera Raya, the quantity is 3 and total bill is 900,000 rupiah. Now it has context and is completely understandable. We call it information. So the conclusion, data is raw fact and the information is the processes, meaningful result that we can use to make decision. Okay, next into the second question. Describe the following production cycles along with example of treat and solution. Okay, I will explain the diagram here. We've got diagram arus data tingkat 0 siklus produksi. For the example, I will use a shoe manufacturing company. First, the product design department atau design product receive a cost information as an input from the cost accounting department atau akuntansi biaya. This cost information is used to help the company create high quality and functional product design while keeping production costs affordable. Once the new shoes is being approved, the product design department generate output document, namely the bill of materials atau daftar bahan baku and the operation list atau daftar operasi. Both pieces of information are then sent to the planning and scheduling department to determine production requirement and factory operation. Next, the planning and scheduling department integrate the operation list with market demand data. This process receive data inflows of customer order atau pesanan pelanggan and sales forecast from the revenue cycle or the siklus pendapatan. This information is used to organize data so that the quantity of shoes produced is optimal. Neither overproduction, which could disappoint consumer, nor overproduction, which could lead to excess inventory piling up in the warehouse. If the data compilation reveals that the physical stock of material in the warehouse is insufficient, this information is then sent to the expenditure atau siklus expenditure cycle atau siklus pengeluaran in the form of purchase requisition document atau permintaan pembelian, allowing logistic to promptly order raw material from external supplier. And then, the planning department must also align human operational capacity readiness to ensure smooth production. This information is sent to the HR or payroll cycle in the form of labor requirement data. This data is used to identify the required number of workers, their skills qualifications such as shoe stitcher or sole press machine operator, and total working hour. And then the output of this process serves as an input for the HR or payroll cycle to send back the regarding labor availability, ensuring that the master production schedule or MPS is realistic and can be executed by the current staffing level. And next, once raw material are secure and staff allocation is scheduled, and the planning and scheduling department send the production order, material requisition, and move ticket to the production operation department. This data is used to provide official work instruction and authorize to draw physical material from the warehouse to the factory floor. As soon as the factory team start cutting the canvas and bonding the soles, these raw materials undergo physically transformation and are recorded in the system as work in progress or WIP, WIP. And then while the manufacturing wheels are actively turning in the production operation department, factory worker document their labor performance. This information is sent to the cost accounting department in the form of time card, move ticket, and material requisition. This data is used to calculate the fair share of base salaries, allowance, and overtime pay for the worker. The result of this process become an input for the cost accounting department when the HR or payroll cycle send back a financial summary to the direct labor incurred during the shoe manufacturing process. Next, when the shoes are fully assembled, laces, and pass the quality control tests by the quality control team, their status change from work in progress to finished product. The physical product along with their data are immediately sent to the revenue cycle as finished good, so the sales team can promptly distribute them to customer. And then the cost accounting department is responsible for compiling all expenditure. This process combines the operational data with external cost input, especially raw material cost and overhead cost, and then send from the expenditure cycle, such as factory electricity bills, sewing machine depreciation, and building rent. This data is used to precisely and accurately calculate total manufacturing expense to determine the cost of goods manufactured, or COGM. This input of process will serve as an input for both internal and external parties. The first one, this information is sent to the general ledger and reporting system as an cost of goods manufactured journal entry to update inventory account balance on the balance sheet and the cost of goods sold on the incoming statement. And the second one, this information is sent to the management in the form of an operational management report, such as a cost variance analysis and production line efficiency. This data is used to assist the executive board in evaluating factory operational effectiveness controlling budget, setting market price for the shoes, and making long-term strategic decisions. And then we move to the general issue. Throughout the entire cycle is inaccurate or invalid master data. This caused by manual data entries error by staff or human error, a weak database integration system, or a lack of supervision over data modification. The impact on the company is a cascade of failure across the entire production system. The company could incorrectly order raw material, misschedule machinery, and generate misleading financial statements. For the example, a staff member incorrectly enters the required number of shoes sold in the system bills of material atau daftar bahan baku document. It records 20 sold for one pair of shoes instead of a correct two sold. The system automatically orders thousands of excess rubber soles from the supplier, freezing the company cash in that stock. So, what's the solution and control about this case? The first one we should data processing integrity controls. What is data processing integrity control? Is implementing automate input validation check in the system, such as size check, range check, or responsible tasks. The second one, access restriction. Enforcing strict digital access control or role-based access control to ensure that only highly authorized employees can modify the master data. And then a review of all the changes, mandating periodic inspection and formal manager approvals for any history of modification made to the master data. Okay, let's move into the third question. There is a study case about assessing the weakness of COSO internal control on the expenditure cycle. In this case is ABCMSME. You can see on this video for the study case. I will analyze internal control weakness. First one, I'm going to analysis of internal control weakness in the ABCMSME case and the connecting of each weakness with relevant COSO component. If we design the daily operation at ABCMSME, we will find a series of interconnected weaknesses from upstream to downstream within their expenditure cycle. Here is the sequence of our field audit finding. The first one, we got this information is a lack of formal purchasing request. Lack of formal purchase requisition document. The first FBC MSME, we found that the purchasing of merchandise or operational supplies is initiated without any formal purchase requisition document. The second one is this condition is categorized as a control weakness because there is no mechanism to prove whether purchased goods are actually needed by the warehouse or operational department. The part of the expenditure cycle directly affected is the initial stage of identifying needs or the purchasing process. This caused the company to lose control over its expenditure rate as purchases are made solely based on verbal or impulsive estimates without proper inventory planning. This weakness relates to the GOSO component of control activities, specifically regarding transaction authorization, uh, which should originate from the bottom up before being approved. As a result of this condition, the company runs a high risk of making unauthorized purchase or accumulating the wrong item in the warehouse, ultimately draining operational cash flow. The solution the company can apply is to create a simple business purchase requisition from, for example, digital or physical, that the warehouse department must fill out, starting the reason, uh, item type, and request quantity before moving on to creating a purchase order. And the second one is no segregation of data. Merging of authorization and recording function by staff Dina. No. The first one, the daily task sheet show that a staff member named Dina holds full control over creating purchasing order, as well as recording to the accounting entries for this purchasing transaction into the system. This condition is a fair uh, violation of fundamental accounting principle, segregation of data. Um, Based on this slide, the authorization function is creating a purchase order, and the recording function or bookkeeping must be separate so that no single person can control a transaction from beginning to the end without supervision. The effect part of the expenditure cycle are purchasing and account payable. This causes total loss of the check and balance function. Dina has absolute power to manipulate transaction without anyone else noticing. This weakness relates to the COSO component of the control environment and control activities, as management has failed to design a secure organizational structure. As a result of this condition, the opportunity for fraud is wide open. Dina could easily create a fictitious PO to fake the vendor, which might belong to her on her associates, and then record this payable transaction in the book as if they were legitimate business deal. And then the solution the company can apply is to separate this function by involving the owner or another staff member. Dina may prepare the draft purchase order, but the final authorization of the purchase order must rest with the owner, while the recording should be done by a different finance admin staff. And then we move into the unsigned voucher and check. Unsigned cash disbursement, document, and duplicate payment. First, in the final stage of the cycle, which is cash disbursement, we found evidence that payment purchase were often processed without authorized signature. More alarmingly, the company made duplicate payments, so the same vendor for the same invoice. This critical failure is directly linked into the COSO monitoring company, monitoring component in a healthy system. Monitoring should provide ongoing evaluation to ensure that internal control are present and functioning as intended. This causes total absences of oversight in the cash outflow process. The fact that duplicate payment occur and when unnoticed proves that the ABCMSME lack a continuous evaluation process to assess the effectiveness of their development process. This weakness falls under COSO monitoring because management failed to perform independent review or routine data reconciliation to catch control breakdowns such as unsigned document. And as a result of this condition, the company not only suffered direct cash loss from duplicate payment but also lost its ability to detect fraud or mistake early, as there is no post-transaction review process. So the solution of the company can apply is to strengthen the monitoring function by having the owner performs like surprise audit or conduct independent monthly bank reconciliation to ensure that all expenses recorded in Excel are legitimate and that no payment has been processed twice. Okay, we move into the lump sum Excel bookkeeping. Lump sum or global expense recording without detail in Microsoft Excel. Our team found that the bookkeeping for expenses and account payable at ABC MSME is only recorded globally as a lump sum in Microsoft Excel without clearly detailing the items, serial number, unit price, or vendor. This method violates good accounting standard because daily accounting record must be reliable, detailed, and traceable at any time. The effect parts of the expenditure cycle are the management reporting system and account payable. This caused the resulting financial statement to lack transparency and analytic value. Management will not know which operational activities consume the most cost or which vendor offer the most efficient pricing. But this weakness relates into the COSO component of information and communication, where the quality of financial information flowing to management is extremely poor. As a result of this condition, the accuracy of the financial statement is highly questionable. Management could make the wrong business decision, and most critically, it creates a weak audit trail, making it difficult to trace funds if a cash discrepancy occurs. So the solution the company can apply is to replace the messy Excel format with a standardized cash disbursement journal template and complete with a column for date, voucher number, vendor number, item description, quantity, unit price, total, and the related expense account. And the last is weak IT system access control. Critical IT and access control gaps. The Excel file used to record the entire expenditure cycle is stored on an operational computer that can be freely accessed by anyone without password protection, is never backed up, and lacks change log. In the modern business era, relying on an open Excel file without data security protection is akin to opening the floodgates for both intentional data manipulation and human error. The affect areas are the data integrity and the information security of the entire expenditure cycle. This causes financial data to be in high danger. Anyone passing by or borrowing the computer could alter nominal figure in Excel, delete transaction row, or erase the entire financial file, either accidentally or intentionally to cover up the fraud. This weakness is related to the COSO component of risk assessment and control activities. because management has neglected to assess the digital risk, threatening their business data continuity. As a result of this condition, if the computer suddenly experiences a hardware crash, the company will permanently lose all financial data. Financial report will be chaos and tracking down a manipulator will be impossible because there is no change log to see who last altered the data. And then the solution the company can apply is to enforce password protection on the Excel file, active Excel internal thread change feature as a simple change log, and mandate automatic daily afternoon backup to a free cloud service like a Google Drive, linked to the owner personal emails. And then we move into the risk and impact analysis. The potential risks that arise due to this weakness is the first one is risk arising from the lack of formal purchasing requisition document. Okay, working capital lookup and debt stock accumulation without a data-driven trigger from the warehouse. Uh, Procurement becomes entirely reactive or impulsive. The business risk buying inventory that is not aligned with actual demand, leading to cash being prematurely converted into overstock, perishable frozen food items that might be spoiled before they are sold. Procurement inefficiency and supplier kickback. When buying is initiated arbitrarily, there is no transparency regarding why a specific vendor was chosen. This opened the door for employees to purchase goods from suboptimal suppliers who offer low quality materials or inflated prices in exchange for personal incentive or under the table kickback. Second one is risk arising from the merging of authorization and recording function. Risk arising from the merging authorization and recording, there is a high exposure billing scam for internal corporate fraud because DINA command both of authorization of a transaction, creating the purchase order, and the recording function with bookkeeping. She possesses the perfect structural environment to execute an undetected fraud loop. Total elimination of check balance is a human error, such as entering an extra zero on an invoice amount or missing vendor details, will remain completely invisible because the person who input the transaction is the same person responsible for the ensuring its recording accuracy. There is no second line of defense to catch error before they distort the financial ledger. And then the third is risk arising from unsigned cash voucher and failed monitoring. Risk arising from unsigned cash voucher and failed monitoring is direct liquidity and drainage, habitually paying duplicate invoice, bleeding in immediate liquidity out of the company bank account. This reduces the daily cash reserves needed to meet critical short-term obligations such as payroll, rent, and utility bills. Exploitation by review vendor, relying on supplier to voluntary return overpayment is a dangerous operation risk. Review vendor may be sample retained to duplicate cash disbursement, recognizing that ABC MSME internal accounting loop is too weak to notice the discrepancy. Opportunistic asset misappropriation. Processing disbursements without mandatory supervisory signature a normal a culture of carelessness. This honest staff can be exploited by using unauthorized personal bank transfer or unapproved payment through the banking system, knowing that the management does not cross every purchase post disbursement. And then the fourth is risk arising from lump sum or global expenses recording in Excel. Complete extension of the audit trial, the financial transaction must be traceable from the financial statement all the way back to the raw source document. Recording costs globally as a lump sum completely sever this link. If an external auditor, tax authority, or owner attempt to investigate a cash discrepancy, it will be impossible to isolate which specific item or vendor caused the anomaly. Strategic and analytic blindness. Management cannot perform reliable cost volume profit or CVP analyzing or variance tracking. If you don't know the exact unit price, item description, or specific individual cost, you cannot calculate accurate profit margin per product line, leaving management blind when setting sales price or negotiating bulk vendor discount. And then the last is risk arising from weak IT system access control. Catastrophic business interruption or data erasure. Operating a business entire financial core out of an open unbacked Excel sheet means the firm is one technical glitch away from the total operational freeze. A simple hardware crash, a hard drive failure, or ransomware virus infection will permanently erase a year of historical accounting data, making it impossible to calculate accurate taxes, verify supplier debt, or prove business performance. Fraud, concealment of loss, and forensic proof. The lack of access control with no password combined with the absences of a change log yields zero accountability. Even employee altered financial row to mask cash debt or match a manipulate ledger. Management cannot generate a system trail to prove who added the sale, when they were added, or what the original figures were. This grants bad actor total digital deniable. And then we move into the realistic improvement recommendation from MSME. You can see on this table as an MSME or ABC MSME certainly has limited capital and cannot hire dozens of new employees to rigidly comply with segregation of duties like a large corporation. Therefore, based on our lecture materials, here a tactical, low cost, yet highly efficient solution that the company can implementation immediately. The first one, owner oversight in authorization. Department or area address is purchasing and cash disbursement. Why this solution is effective? Because there is a zero cost and require no new hire. It utilizes the owner as the company ultimate control layer. And how does this solution reduce risk? Dina may type draft purchase order or prepare a banking transfer, but the transaction OTP token or physically purchasing order signature must strictly be held by the owner. This 100% shut down Dina's opportunity to execute fictitious cash disbursement or fraud. Then second one is implementation of simple purchasing request. This need determination process. Why this is solution is effective? Because they eliminate the culture of ordering goods verbally or guessing without a real warehouse need. And how does the solution reduce risk? Force to the warehouse department to write down the detail of items that are actually depleted, reduce the risk of unauthorized purchases, and that stock build up that jam cash flow. And then the third one is manual three-way matching procedure. Accounting and invoice verification or account payable should ensure billing accuracy by matching interconnection physical document before cash is released. That's how does the solution reduce risk? Before paying a vendor, three documents must be matched: WhatsApp chat or purchase order, goods receiving note, and vendor invoice. Payment is only allowed if there all three this document is matched. This successfully prevents duplicate payment risk. And then the fourth one is voucher system and paid stamp implementation. Cash disbursement should be provide a permanent physical identifier on billing documents that have been processed. As soon as money is transferred, the vendor invoice is stamped with a wet ink reading like paid and date. So stamped documents are strictly forbidden from being reprocessed. That kills the risk of double invoice submission. The fifth one is Excel journal retraction and digital access detection. Accounting information system and financial reporting should secure the digital integrity of bookkeeping data from unauthorized access. So they should be applies a strong password to the financial Excel, activate the Excel internet track change as a free change log. The file must be saved on a cloud like Google Drive, further to synchron and using the owner's personal email. So this will be suppresses human error and data loss risk. And then the last one is independent bank reconciliation by owner. So this financial monitoring should be quickly detect cash discrepancies or anomalies at the end of the month between Excel record and real bank money. How does the solution reduce risk? At the beginning of each month, the owner independently downloads the bank statement and match it with Dina total Excel expenditure. If Dina attempts to manipulate the Excel figures, the fraud will be instantly uncovered through this reconciliation process. That's all into this middle test of counting information system. Thank you for watching, and I'll say goodbye.